Good day, market update. This is the first market update of 2023. Welcome to High on Real Estate and Happy New Year. What I want to talk about today was kind of really the fundamentals of the market and where we are in 2023, the beginning. A lot of people have been coming up to me, especially during holiday parties, beginning of the year. Everyone's saying, "Hey, new year, new market, everything's going to be, different." No, the fundamentals, unfortunately, are exactly the same as last year. We've had a very bearish market last year. Last year, let's talk about kind of the Nasdaq, which really affects the Bay Area the most because most of the Nasdaq stocks are made up of these Bay Area technology companies like Apple, Facebook, Google, the big ones. What is going on with the Nasdaq? Last year, the Nasdaq dropped 30%, more than 30% over the year from its height. That is a very, very big drop, and we're definitely in bear territory. So what we kind of anticipate this year is, a flattening of that. I don't anticipate any more, really, significant drops, but flattening and kind of what they call a horizontal trend, which isn't, positive. It's horizontal is not bullish. It's still kind of in that bearish territory. And that's really what the Fed is pushing. The Fed is pushing a very bearish market. The Fed is pushing recession. We're definitely going to be heading into a recession, having two negative quarters. The Fed is still pushing interest rate hikes, not big ones like we've seen last year. And I do anticipate that kind of the 30-year fixed rate is probably going to be pretty flat. It's going to be in this 6 to 7.5% rate, depending on your qualifications. I anticipate that through the next few months, I kind of start seeing some easing, probably after the next quarter or after the first quarter of this year. But I do anticipate them raising the rate maybe 0.25%, maybe 0.5%, one or two more times. And that is definitely going to hit the short-term rate and affect the long-term rate as well a little bit. Once the rate starts easing up, I do anticipate house prices flattening and then starting to move towards a positive trend. But I don't think that's going to happen for at least 6 months. So I definitely see this bearish territory in the market overall, housing market as well as the stock market, for at least another 6 months. What will this mean for 2023? I anticipate this bearish market will definitely affect the supply and demand factors of the house market that we're in right now, and that's kind of the only thing that's keeping the market as high as it is. San Jose area, we haven't seen a real drop, maybe a 5% drop overall in the terms of from the height of the market to where we are now. I do anticipate a little bit more of a drop. I think we might hit another 5, maybe 10% drop over the next 6 months. That will really be determined by supply and demand. Really, the supply side. We're in a very, very low supply market, and that has been driving prices flat and keeping them steady. If we did, have a dramatic supply increase, we would definitely see the house price drop in the Bay Area, which we haven't really seen too much other than, little pockets here and there. Once that does change, which we will see, I think by February, March, where we are, that will really determine the market and the outcome of 2023. So stay tuned, keep in touch, and let me know what you think. Share your thoughts and comments. Have a great New Year's 2023 market update, High on Real Estate.